Here's your stock market review for today. Stocks sold off a little bit, somewhat. The S&P 500 fell about 0.625%, 2/3 of a percent. The selling actually started late last night. I think I saw about 6 o'clock New York time. Things started to slide. Then we got retail sales. Retail sales cementing something I've been talking about for a minute, that this economy is still moving forward. The Federal Reserve is likely to not lower interest rates anytime soon. Sure enough, that's exactly what this report is sort of reemphasizing. Bond yields, the 10-year yield pushing back up above 4.0%, up to about 4.11 at one point. I'm going to break that down. I want to show you what the VIX is doing and the put-call ratio, showing you how there was a pretty big spike in people buying puts, but then they kind of mellowed out throughout the day. So the fear is kind of already subsiding a bit. I'll break that down in the stock market review today. Also, I want to take a look at gold. Gold is selling off because interest rates are remaining higher as well. There's a few other charts I want to break down. Let's jump in. If you are just joining me for the first time, thanks so much for stopping by. Make sure to hit the like and follow button. Thanks so much for the great comments. The channel is growing quite rapidly. Also, I've got my website, dhtayloranalysis.com, where you can find, of course, the top 50 value investment stocks. These are my picks that are solid value investments, although not all of them you'd want to pull the trigger right now. I just keep them up there in case those values drop to a point where that would be a time to hit the button. There's other things on the website, of course, but let's jump into the stock market review today, where strong retail sales, bad news for stocks. Stocks did sell off a little bit, 2/3 of a percent. In the bottom right corner here, you can see U.S. retail sales year over year change. We're starting to get robust again. Last month, numbers were solid, but they figured, economists figured that things would be slowing down a little bit for retail sales. Consumer had other things in mind. Consumer busted out on the cards and just went for it. And as you can see, we're starting to get up to levels pre-pandemic where this kind of rate of growth was kind of normal. It reiterates for me, and I've been saying this, especially in the stock market reviews, that I believe we are not going to see interest rates moving lower nearly as fast as anybody is calling for, including the Federal Reserve. This really cements it. And I've been pretty consistent on this. I'm saying, I just don't see it yet with this information we have. Employment numbers unemployment is declining. Employment is still strong. Well, if employment is still strong, consumers are still consuming. And we're seeing that in the evidence here. The Federal Reserve does not have the information right now where they can justify lowering the interest rates. This economy is strong. And that's an important factor to kind of consider as the focal point, because, okay, the economy is strong. So stocks, broadly speaking, would continue to move higher because these companies are going to continue to see revenue gains. That's important. And they're doing that with interest rates that are much higher. On a long-term basis, I could see interest rates needing to move lower, but for right now, no, not yet. And it might be that the Fed still has to raise interest rates if employment gains start to increase again. When you get retail sales numbers like this, that could happen. All right, so one of the things I do, and I break this down on the stock market review daily, what I do is I take the 11 sectors and I have all 500 stocks plus NASDAQ. There's a few extra in NASDAQ, and I break it down to just one share. And I ask the question, the next 4 quarters divided over top of the current price, what is the yield for that specific price? Add up all 500, break them down into the 11. You can see the various, this is the select sector ETFs. Those are the symbols I'm using. But again, I don't put weighting. I just do one share. Given that, S&P 500, 5.031%, that's a solid buy. The U.S. 10-year Treasury yield just pushed up above 4. So if you bought one share of the S&P 500, each one, you're beating the benchmark rate by 1 full basis point. NASDAQ, of course, much lower. And that's sort of one of the things you have to kind of keep in mind. Now, just because these stocks are undervalued does not necessarily mean that they're going to go higher. Some of these stocks stay undervalued for some time. And you can see the technology, XLK stock, 3.20%. Again, NASDAQ heavy. But that's the breakdown for those. Moving forward, here's a good look at the tracker. And I just pulled this off the website. So unfortunately, the data points that I have that I just showed you on that's from, I use an Apple computer, and it gets those quotes from the midnight the night before. This is what happened today, kind of breaks down the trackers for each sector so you can see what happened. The U.S. 10-year Treasury yield. This is the movement for the U.S. 10-year Treasury yield. And actually, we did go above 4.11%, pushing up to 4.13%. I could see 4.2 hitting in the next few days. We have PCE inflation deflator next week. And my take on that is it's not nearly as soft as the market would hope to get. Given that, interest rates will remain higher for longer. The information we have will not allow the Federal Reserve to lower interest rates. If they did that, they would accelerate the economy. This economy is fine. Revenues for companies will remain fine. But you're going to see some opportunities, we'll call that, where some stocks are overvalued and they'll probably come down because people will take profits, and they may cherry pick some of those value stocks down below, which are undervalued. All right. The U.S. Treasury yield, here's a bigger look. I kind of took it back a little bit. That first one was the daily chart. This one's the 2-hour bar chart, which goes back into December. And as you can see, we're not, the numbers we saw back in November, we're not even close to that. I think we're probably going to see 4.15 to 4.25 at some point, probably before the end of this month. I've been shorting TLT stock, selling calls against TLT stock. TLT stock, of course, is the Treasury price ETF. And as yield goes higher, price goes lower. Those options are looking like they're going to expire absolutely worthless. So that worked out for me on that one. S&P 500 index. Here's the daily. And I put, now I'm in mountain time, Santa Fe, New Mexico. And I use military time. My apologies, but I'm a veteran. Bottom left corner, you see 1600. That's 1800 or 6 o'clock New York time. So at 4 o'clock my time, the market closes at 2 my time. You could see things just kind of kept sliding all night. Then we got this morning we got the retail sales number, and you can see it was kind of a bearish day, but we did recover at the end of the day. A bigger look into what's going on. We may turn right back around, to be perfectly honest with you. This economy is doing fine at these interest rate levels. But one thing I've said before, what if the economy starts accelerating again? The Federal Reserve will have to raise interest rates even more to kind of contain those pressures. Keep an eye on mortgage rates. Keep an eye on what's going on with housing prices. Those are important factors for the economy right now. The VIX popped up a little bit. One thing to know about the VIX is there's 2 variables in the mathematics. Put-call ratio is one of them. The next thing, of course, is the value, the absolute value of a 30-day option at the money. If there's more puts being purchased at that time, that will elevate the price of the VIX. And so the ratio is an important factor. And as well, the other important factor is how much those options are going to be worth. They're 30 days out at the money. If they start to spike up, that will push the VIX. And as you can see, the VIX really isn't doing a whole lot. No one's predicting Armageddon in the market. I expect the VIX, we may have topped out here. I'm looking to actually sell some calls on some of the ETFs against the VIX and kind of take profit there, because I think we're probably going to settle down a little bit. On the VIX itself, I don't think we see 17.5, 18, 19 in that area, and I might make a trade on that. Here's the put-call ratio. Spiked up early this morning, settled down by the end of the day. We're a little elevated, but still kind of right there. The put-call ratio, 1 for 1. That's a little high. Normally, we're down about 0.85, 0.9, 0.95. So we're a little high right now, but we were as high as 1.5 earlier in the day. What is happening with the US dollar based on higher interest rates. As you can see, this is the 2-hour bar chart. The push higher in interest rates drew money into, because of the differential between interest rates in different countries, drew money into the US dollar to take advantage of that higher interest rate here in the United States. What they'll do is they'll sell the currency in the lower interest rate country, such as Japan, where it might be, say, 0.1 right now. They'll sell that and buy US dollar where they're earning 4.1. So that's 4 full basis points in differential. Money will move chasing that differential, which will push the dollar. Finally, spot gold sold off. Plain and simple. If interest rates remain higher for longer, gold prices will move lower. I trade a lot of silver. I sell puts or calls depending on where silver prices may be at any one time. And I've got that one account. I've been doing it for I don't know how long. Actually, I do know how long. I sell those options, and after about 3 months, I pull that premium that I've collected, and then I'll buy physical coins, silver coins. I have a small collection of silver coins. I'm sort of a bug on that, and I don't really know why. It's just one of those physical things that I kind of like having around. Nonetheless, make sure to hit that like and follow button. Thanks so much for stopping by the channel. Channel's about to hit some milestones, so I'm really happy about how fast this is all happening. Make sure to stop by dhtayloranalysis.com. We'll see you in the next video. That's it for the stock market review today.